Good morning, everybody. Welcome to the Friday morning space show program. Again, this is the West Coast version because we are located in Las Vegas, California, and our guest is in the United Kingdom. I will introduce Armen in just a minute. Um, I want to just point out a couple of other things, and mostly for the archive listeners. Many of our blog posts have um, website addresses in them, URLs. So the company that organizes our comments, and this is on thespaceshow.com, is Discuss, which really should be discussed, but that's another problem. They block most of the comments that have URLs in them. And I'm not aware that they're blocked because when I go to the blog, I can see them because I have a master account. But if I use another browser, they don't show up. So many of you who are commenting are not seeing your comments on our blog. I want to offer you the alternative to post comments for shows on Substack. Our address is Dr. Space, DOCTOR, space dot substack.com. Substack doesn't block anything. And furthermore, if you are a subscriber to Substack, you get a notification of the comment being published, but it's there for anybody to see. So if you're posting comments and you have URLs in it, go ahead and post them to the Space Show. But if you can, for sure your comment will be accepted and distributed if you use Substack. So just a little note to you, there's no customer service with Discuss. There's no way to override this. I have tried for years, and this is a problem with it. And I don't want to get rid of it because we have some really valuable comments over 20 plus years of doing this, and I don't want to lose them. So the Substack remains an alternate. Coming up on programs, Dan Adamo is Sunday, and he's going to comment on this orbit for going to the moon. He has a lot to say about that. And then Zimmerman is back Tuesday night. And then Friday, our physicist friend from Italy, Dr. Del Popolo, who has this book out called Extraterrestrial Life. We Are Not Alone, is with us. And AJ Kathari talks about his presentations in India and how he was received in India. And, uh, and then we're going right along into early February. So Armen Papazian is back with us. He's been a guest on the Space Show several times. We're fortunate to have him. He is a financial economist, author, consultant, innovator. He has an amazing track record in global finance. He has more than 20 years experience in sustainable finance, capital markets, and analytics, and space finance and economics, and options on how to get off the planet because most of our economic system can't carry the load of taking us off planet. And we may get into that today, although that was the subject of his last show when he was on, I believe, last year. He has a Doctor of Financial Economics from Cambridge. He's a Cambridge Judge Business School person. And he has a full bio on the website. He has a paper also on our website. I should have put it on this page too. The Space Value of Money, worth reading about. Armen, welcome back to the show. How are you?
Thank you, David. It's great to be back always. Thank you for having me.
So you have done a study on money and flows and crypto. It does have a relationship to space. So why don't you introduce us to your study and the space connection? And I do find it interesting that we raise an absolute tremendous amount of money for entrepreneurial companies in the space business. And look at the amount of money that Musk raises. But Some can say it just takes time to develop the technology. Sometimes it takes time for the regulations to evolve a little bit. But after all this money that's pouring in, we are still a terrestrial bound humanity with a terrestrial bound economy that is not financing grand space projects. And so, whether that has anything to do with what you're talking about, I can't answer the question. You know, I studied business economics for my PhD, which is actually a DBA, and that was part of my dissertation. And we are not seeing tools for the kind of financing that true space settlement and getting off this planet are going to require. And will the money supply expand to allow that? If it does, it'll be a fiat money supply, meaning it's backed by crap. So I, I'll turn it over to you, Armen. You're the expert, not me. Welcome back.
Thank you, and well said. I have to say that intro sums it up. But first of all, you are absolutely correct in your assessment that um, our current monetary current financial and monetary framework and architecture prohibits our expansion into outer space. And this was actually the subject of a paper that was published in September 2025, which I think we discussed once before. But I think it's very relevant because it also is the foundation and the starting point of my more recent paper, which discusses crypto and crypto mechanics, as I call it. And the fundamental reason why our monetary system is actually unable to fund and support the massive investments that we need to build the habitats of the future and the space elevators of the future and so on and so forth, is fundamentally linked to obviously the debt-based logic of money, right? The fiat money. But also beyond that, it's not just the fact that the creation of money is linked to debt. In other words, in a more specific terminology, money is created as liability backed by debt assets. That's the more accurate equation. But beyond that, there is also a more theoretical impediment, and that links to the financial value framework that we have, which is basically entirely built around risk and time, mainly risk and calendar time, right? So think about it this way. I mean, the entire money supply that is created, taking the example of the US, which is created either through banks giving out loans or the Federal Reserve giving out loans and or buying debts in terms of bonds and mortgage-backed securities, right? The entire money supply is created through debt instruments, which are all linked to calendar time. And what is calendar time? I mean, calendar time is built around a day and a year, which are actually astronomical observations, right? The revolution of Earth around itself and, rotation of Earth around itself and the revolution around the sun. Imagine the entire monetary system of the world is monetizing the fixed movements of Earth, but not Earth itself. The fixed movements of Earth in space, in outer space, but not outer space itself. And when our entire monetary money supply is linked to the fixed movements of Earth, which is linked to the orbit of Earth, investing in order to leave that orbit is very hard. And of course, the rocket investment in rockets, as much as, and obviously we should all be very happy with the progress that Elon Musk is making and others are making from Rocket Lab to Firefly and everyone, and not just in the US, across the planet. But eventually, the kind of mass we need to take into outer space and the kind of investments we need to build the habitats of the future, we're very far from getting to that point. And that the monetary architecture acts as a bottleneck, not just in terms of the challenges it poses to first on the public side, because obviously public budgets are dependent on public debts mainly. But also because the private side and the private space sector, as much as the commercial side has grown via satellites and adjacent downstream services, eventually most of them are still very much dependent on government procurement. And so, in other words, that bottleneck that is created through the architecture that we live in makes us very much chained to the surface and monetizing the fixed movements of Earth in outer space, but not Earth and outer space itself. So anyway, that was the article that I had published last in September 25. And the recent paper basically tries to is an investigation into the crypto market. And the motivation behind it was that many seem to think that the cryptocurrencies can potentially provide an alternative to this fiat money. And I wanted to, even though I had already argued in the Space Value of Money book that the logic does not actually improve the cryptocurrency logic does not really improve the logic of money itself, even though it may have improved some of the technology. So I wanted to do a much wider investigation. So I picked the top 30 cryptocurrencies as of the 26th of September 2025 and dive deep into each one. How are they created, the logic of their creation, and that was the most, so that's how it links to space, because the conclusion is that cryptocurrencies, even though they have shown that the technology and logic of money can be improved or changed, they haven't yet offered a logic that is actually an improvement on the debt-based logic of money. So we have still monetary evolution is still ahead of us. So that's how it links to space.
So
Question.
Go ahead, Phil. I'll let you go.
Okay, thanks. So are there terms for other kinds of time besides calendar time? So what I was thinking was, like the rate of progress over the years and centuries has been increasing kind of exponentially. So is there a term for that kind of time? And another kind of time might be, related to how long we live. So as we improve anti-aging technologies, this might actually increase our time horizons. Maybe there's a term for that kind of time. Are there terms for types of time besides calendar time?
Well, I'm sure there are, but not in finance and not in economics. And that's why I focus on calendar time. So because the argument when it comes to all the instruments that we use in finance and economics are built around calendar time. Now, one other concept which is very relevant is that at least I'm talking from purely finance and economics perspective here. So there may be other perspectives that may provide that terminology you're looking for. But in economics and finance, we have also there have also been propositions of psychological time, right? So how much do we, when an investor looks at an investment and expects the returns, whether it's the stock market or any other market. So there is an understanding that there's also a psychological time vis-a-vis those financial markets and investments. But that's a very unique perspective to investors and how they perceive time as they invest, and the potential impact of that on their trading, on their decisions, and so on. But when it comes to the creation of money, i.e. when banks give out loans and when central banks buy bonds, mainly those two features, the logic of money, of time that is relevant is only calendar time. So that's my kind of answer, but
Um,
I hope it sheds some light.
First of all, I want to welcome our telephone caller from area code 571. So you're welcome to participate. Just raise your hand or uh, let us know that you would like to contribute. But it seems to me, and I'm not an expert on crypto by any means. When I went to graduate school, it wasn't even invented. So we didn't even get one paragraph on it. But crypto is still based on calendar time. So as far as I can tell, that if we're looking at funding the kind of investment, say to build an O'Neillian space station, or the kind of investment needed that Musk talks about to have, I don't know, hundreds, thousands, millions, whatever his latest figure is, of a town or city or settlement on Mars. Crypto is just another option based on our terrestrial economic system and foundation. And it's trying to, number one, make transactions autonomous, not autonomous, but secret. Anonymous is the word I'm thinking of, uh, for people who want privacy and secrecy, regardless of why they want it. And so it's trying to do an end run around certain things, but it still has the framework of functioning in a terrestrial economy. And I doubt that it can produce the kind of capital and cash flows needed to do this. And if it did, talk about fiat money, I don't know what it would cost to build an O'Neillian station. But if you somehow put that in terms of crypto, I mean, you'd have fiat crypto on steroids plus. So
Mhm.
no matter what we seem to do, we are prisoners of what you call calendar time and the terrestrial way economies function. And I read your report, so I know that's your conclusion, but that is your conclusion uh, for people who haven't gone through your report yet, that it doesn't solve um, the problems of being bound to a
Mhm.
economic system that can't produce the gigantic cash flows
Yes.
without some kind of fiat behind it, which kind of to me makes it worthless. I think our debt in the United States almost is at the point of making it worthless. What is it, 37, 38 trillion dollars,
Mhm.
uh,
Mhm.
with no prayer in hell of ever paying it off.
Actually, what you're saying is very on point, because it's not just crypto is terrestrial or still linked to calendar time. Crypto, first of all, that was the whole point. I wanted to understand all these many different cryptocurrencies. So the questions that the study answers for each of the top 30 cryptocurrencies, that basically together, the top 30 cryptocurrencies that I looked at, they cover 95.5% of the entire crypto market capitalization. That was the reason I chose the top 30. And in the top 30, you have, and the questions that I asked were, one, why are new coins, why are they created? One. Second, when are they created? When are new coins created? And then third, how are they created? How are they issued? And to whom? So for each of the top 30, those are the answers I try to answer. Now, this, when I say why are they created, the why goes beyond the quote unquote the Bitcoin philosophical why to remove banks and central banks from the process of money, which was the Nakamoto Y and the initial disintermediation and decentralization justification of the creation of cryptocurrencies. That's a very broad statement. So the question was to look at them much more closely and find out. So first of all, the first evidence that I found that the logic of creation of these top 30 cryptocurrencies is diverse, very diverse. Amongst them, 14 of them, first of all, have a pre-minted supply. So in other words, they are limited by the number and the amount of coins they have issued, and they're all pre-issued. So that's it. So however many they may have. Others are not. So amongst the top 30, 4 were stable coins, including Tether, USDC, USDE, and DAI, which is actually USDE is a synthetic dollar, DAI is a crypto stable coin. So they all work differently. Three different kinds of stable coins. And then the rest were divided between groups where the creation logic is pretty much based on a combination of 3 things. One is transaction validation. The second one is pseudo-randomness and a size-dependent probability. Basically mathematical guesswork, a very basic mathematical guesswork, based on pseudo-randomness and size-dependent probability. So basically, beyond the fact that crypto is terrestrial, crypto is replacing the debt logic of money with randomness or pseudo-randomness. I mean, we're not improving. Basically, there's a payments revolution without monetary evolution. And in a way, the conclusion, so in other words, you're absolutely right. Crypto cannot afford to do that. First, because many of them have limited and capped supply. The others is because their creation logic is built around randomness, and which is basically the randomness is adopted inside the protocol as a proxy for decentralization because of the overall ambition that they present in crypto markets, that cryptocurrencies are democratizing finance. In fact, they're only randomizing it. And in a way that is very opportunistic, and underneath it all is very much still managed. It's just that it's not managed by bankers and their credit policies. It's managed by the coders who created and their own, and the code with which they are creating and the functions with which they are deciding when to create a coin, to whom they are distributed, how that probability works. And most of the time, the distribution of the coins are to a very specific group of entities, which are the very few people who have the knowledge and the expertise and the dev speak, as they say, the technological, software development jargon and knowledge to be able to create those entities to tap into those distribution events of crypto. So in a way, it's you're absolutely right. Crypto is not the solution. We still have another leap to do where we have to replace the logic of fiat money from debt into something which is what, as you remember, my proposition is that we have to replace it with space value creation. Not randomness. So sorry, that kind of was a long answer, but I think your question was so on point, what the point you made, that that's the only way to really respond to the very important point that you made.
Isn't the real problem though with the space development and finance is just the lack of what is the product that makes a profit? Isn't that the big issue? That Starlink has found a way to make some profit for SpaceX, but I mean, a lot of things that we'd like to do just probably aren't going to be profitable, at least not in the near term. That's where your time, I guess, gets into it. It takes time for it to become profitable, and anybody going to wait that long?
Yes, absolutely, absolutely, and that is where the problems, actually, the problem with the funding of the space sector are 2 kinds. The kind that you raised is for the private sector, because the public sector doesn't expect to make a profit, right?
Mm-hmm.
But the problem with the public sector, that it's the structure of its funding being dependent on government allocations, which are themselves dependent on government debts. The chain on the public side comes from the fact that the budgetary allocation is dependent on the overall public debt levels, which links to the monetary architecture.
Mm-hmm.
On the private side, you're absolutely right. The whole point of the challenge of the private sector, and which is what I argue in my last book as well, that this space economy is earthbound. And the only sector within the space economy that's growing, which is directly linked to satellites, is growing because it is about operationalizing and commercializing space-based infrastructure to deliver goods on Earth, goods and services on Earth. It's not about exploration. In fact, overall, it's a tiny fraction of the space economy that is about human expansion into outer space. Even Elon Musk, I think I referenced a couple of tweets from him where he actually, and I found it quite ironic, because he says, buy the Starlink thing because we are funding the human expansion into the solar system. There's also a logo of Mars on the Starlink router or something like this. Imagine humanity's future evolution depends on one person selling routers and internet provider. So basically, humanity has built such a financial and monetary system that its survival in the solar system depends on the sales of an ISP, of an internet service provider. And it's in the book, by the way. So, but there is a reason for that, and it's deeper than Elon. Elon is actually one of the very few entrepreneurs and who is trying to break that barrier in some way. But there is a much deeper issue that he cannot break, because it has to do with the very frameworks of value in finance and markets. And this is where it comes back to the core principle that I have offered, which is the space value of money. Going to the moon and Mars, use any financial equation you can think of: asset valuation, stock valuation, bond valuation, derivative options valuation, firm valuation, real option, synthetic option, financial option, any instrument you can think of in finance. If you look at their valuation equations, none of them have any space parameters. Going to the moon, to the Mars, they have no value based on all the valuation equations that are used in all the financial markets, by all the banks, by all the investment companies. That's why if you're not generating cash flows, whatever you're doing in space has no value. That's why the same thing we're doing with Earth. We're destroying Earth with the tons of plastic in the oceans, the carbon in the air, the debris around. We are spewing garbage around us. As long as it's not immediately in our vicinity, we're able to abstract it away because the financial models allow it. Space impact is not valued as part of our frameworks. So that's the other side of the argument. And you're spot on, because the monetary limitation is felt in the space sector from the public side. And what you mentioned, the cash flow, the non-negotiable requirement of generating cash flows for anything to have any value, is what limits the private side. And that's why we're stuck. Yes.
Marshall, go ahead.
Yeah. Being a farmer type, I immediately start thinking about the price of wheat, price of cotton, and then you also look at the price of gold, price of silver, and the fact that there is a general understanding of each one of them's value in relationship to each other's value, but you come in there and try to get the value of the moon. and nobody has a clue. There's no relationship to silver or gold or any other commodity. And you get stuck with a bunch of financial people going, well, wait a minute, this doesn't fit in my equations, therefore the answer is no.
Yes.
How far off the mark am I?
You're absolutely right. And in fact, it's funny because if you were to go into space, the kind of commodities that become valuable are the ones that are nearly completely valueless on Earth, or at least undervalued on Earth, right? From water to so basically the shift that and that's why everyone tries to justify exploration by the very distant vision of bringing down precious metals and rare earth minerals to be able to justify us going beyond Earth, because it has to link back to those relative values you rightfully point. Exactly, yes. And we can't think beyond them. And it's unfortunate, but it's absolutely on point. Absolutely, absolutely.
And therefore you fall back on salesmanship, which is one of my personal big buggy boos, is just salesmanship. Elon's a great salesman.
Armen, first of all, Dallas, welcome to the program. Happy to see you again, although we don't see you, but participate whenever you want to. So, Armen, I always look at the practical side of new stuff. We're talking about, new stuff for sure. So, when I see the way space is being financed today, so it involves politicians. It involves traditional economics where you're borrowing somehow. Now, maybe you're borrowing from investors, maybe you're borrowing from a bank, maybe you're starting out and borrowing from a credit card. I don't know. But you're borrowing, so you're creating liabilities and debt. And the system, it's the only system we know. For most people, let's say, 99.999 are not listening to this show, or they haven't read your paper, so they don't know who you are and the kind of work that you do. So they're not thinking that maybe something else might be needed to go further, that I can raise equity money from venture capitalists. I can get debt financing. Maybe I can get a NASA grant or some other kind of grant. So, what I guess I'm trying to say is we're perpetuating the system that can take us probably only so far, but there's no way for people to even consciously be aware that they need to think or create something different. So here you are thinking way, way, way out of the box. How do you make what you're thinking about come into the hands of the people actually doing the space business, the space policy, the government grants, the venture capital, etc.? They're not even thinking about an option. And maybe some of them think that crypto can expand the money supply, and that is still a viable option. How do you make it practical?
Well, perfect question. Again, very true. If you remember, a few times we've discussed this subject, and my first response is always that I'm, as much as I am determined to continue speaking about this, as long as it takes, I'm also very much aware that the barrier we're facing, it's not in the space sector in real terms. And it's one of the ideas that I discussed in the September paper as well, that the defining barrier to our expansion in outer space is not technological, it's conceptual. And it comes and it links to the monetary system, to the same 38 trillion that you were referencing earlier on. Why is it that the US monetary powerhouse is built on a mountain of debt. And in the book that, as you know, in Space Value of Money, and the entire proposition that I'm making is that adopting the transformation, adopting the space value of money principle and the conceptual framework will allow the United States to reinvent the debt ceiling as a wealth floor. Do you see what I mean? The conceptual bottleneck that we're approaching, the X date when the US Treasury will not be able to fulfill its liabilities, that X date is always assumed to be a hypothetical date that will always be pushed forward into the future without ever meeting that date. And potentially a lot of the activities around that are ongoing around the world today are linked to that mountain of debt, right? And the debt ceiling. So the relevance, the practicality, whether we like it or not, it comes to a systemic transformation that will have to happen whether we like it or not, sooner or later. And the framework that allows the United States to reinvent its debt ceiling into a wealth floor is the one that can open that door to a massive infrastructure, technological investment that can build the not only space elevators, but also immense roads into the future habitats, which will require what I call timeless money. You can't expand in outer space without timeless money. If all your money is time dependent, when you're trying to explore another dimension, you're always chained. On the public side, you're chained to the debts. On the private side, you're chained to the private equity or the venture capital or the debt supplier coming and asking for their cash flow. The whole point is to expand into the other dimension. How are you going to explore space with time-based money? It's impossible. And that's the bottleneck it's far grander. The bottleneck is far bigger than we can think. It's not about funding a couple of ventures or Elon even flying to Mars. None of it. None of it. Because by the time we get to that point, we're going to be probably with all the news about hundreds and thousands of satellites being sent and all the dangers and the debris and the plastic in the ocean and the carbon in the air. By the time we get to the technological singularity, we're probably going to be that point where we are already incapable of reversing the damage we've caused because of our own stupidity.
There are some examples of, I would say, nonlinear growth that have driven quite a bit of investment, and also the whole idea of the debt being huge is all relative. Like you could say, if you borrowed $500 to buy a bicycle when you were 17, you might think that's an enormous amount of debt, but by the time you're 20 or 30, you're buying cars, you think that's a tiny amount of debt. So the growth of a country or growth of an individual can make these huge debts, dwindle into nothing just because of the pace of growth. And if you think about industries like, say, robotics or microchips, these things are industries that have exponential growth, but eventually will be capped by the number of people on Earth. Mm-hmm. Space is a similar type of technology. It's probably going to have exponential growth as well, but it might not be capped for a lot longer, not until at least we fill the solar system with people. So mm-hmm. there are analogies on Earth for the kinds of growth that are similar to space-based growth. And obviously we've got some experience with those. Can we sort of adapt them to space-based enterprises?
I mean, the discussion about debt, and you're absolutely correct. It's first the size, the numbers don't mean anything, and I absolutely agree with you. It's the logic that is the issue. You see, I completely agree with you. It's not about the amount. It's not 38. It's not 5. It's the fact that the logic that is instilled, then the kind of chase it triggers, right? Because as much as and obviously there's a humongous difference between private individuals and corporations getting in debt versus the governments getting in debt, right? Because the ability to print and postpone and refinance and all that stuff, that's why and that's how. But the logic itself does not change. The fact that the bond matures in a year's time, which means that your priorities adjust to the financing of that time-dependent infrastructure. So I agree with you, absolutely spot on. It's not the amount, it's the logic that is imposing a set of, because for example, why did the same Elon Musk and Doge and the President Trump, even though in real terms the US space budget was increased, it's just that it was the narrative has changed, right? Space Force, NASA, and so on. But and even now with the recent reversals in NASA budgets, we're still very much on track. But why is it that the same debt space system cannot finance much bigger NASA budget, or it has to go through a 3-year ordeal of firing people at JPL and because of that debt logic, right? So the debt logic is having an impact. And so that's how it links. So you're absolutely right. It's not the amount, it's the kind of prioritizations, policy actions that it leads to, because that growth element, which you mentioned, is key. If you're not growing fast enough to sustain the growing of the debt, the logic basically undermines you. And we have so many examples of countries and economies collapsing because they could not keep the pace with the growth of debt and the growth of productive activity and industry and value. And it doesn't matter how many billionaires you have. It doesn't matter how many multi-billion unicorns you have. It doesn't, because it's not about singular companies making profits. It's about an entire economy producing and inventing and creating, and which is where the real imbalances are. So yes, you're right. Yeah.
Do you see
Go ahead.
a sort of natural evolution as our current systems continue to expand and grow to something that you're talking about? Or does it more or less have to be an interventionalist type of activity to modify and change how we view and act and create?
I think based on human history and human experience, we don't change until it really hurts, unfortunately. Yeah. And I'm worried that this next chapter to bring the kind of change we need. And it's going there. And in a way, the crypto phenomenon has triggered the decay, or not the decay, the reinvention of the fiat architecture. Now, and one of the other conclusions of my paper is that although the crypto market or the crypto ambition was to remove central banks and banks from the process of money, it turns out basically that the same technology that they created, the tokenization, blockchains, distributed ledger technologies, the banks and central banks are adopting. So basically, that technology which was supposed to remove the central third parties is being adopted by the third parties while they are not changing the logic of money. So soon it's going to be tokenized debt and tokenized debt-based money instead of the cryptocurrency transformation leading to a change, not just in the technology of debt-based money, but in the logic of debt-based money. And in a way, that is the next step, I believe, that it's coming from the chaos that we are going through, I think.
Let me ask the big ugly question. The number one thing that brings down governments in the last 100 years has been inflation. And Milton Friedman, basically said bureaucracies that just print money are end up just ruining the whole economic system. And one of the problems is, like I was saying, commodities and inflation and how people value things. Too much inflation causes it to all fall apart. So
Yes.
how do you put the genie in the bottle and cork it?
Well, the thing is, it's kind of a very relevant point. Thank you for that, because there are many misconceptions about inflation and how is it caused and why does it happen, and a lot of the times at least in the post-pandemic period, right, the recent experiences that we've had, and the amount of money that was actually it wasn't printed, it was typed, right? Uh, yes, yeah,
Right.
yeah, it was typed because the quantitative easing is the purchase of bonds by the Federal Reserve from primary dealers, which are banks, and so basically that entire process is about buying already existing bonds and mortgage-backed securities from existing clients in the market and typing the reserves in their accounts. That's it. Now, the funny thing is, though, the quantitative easing process uh, creates a lot of central bank reserves, right? So there are three forms of money: currency, banknotes, central bank reserves, and bank deposits, commercial bank deposits. Central bank reserves and banknotes are created by the Federal Reserve or central banks in general. Bank deposits are created by commercial banks when they give out loans. So the injection of liquidity from the central bank into the banking system is quantitative easing, the typing of more digits into their account and the purchase of instruments. But what banks do with that extra liquidity in their accounts, what credit policies they adopt, that's where the actual answer is, not in the fact that the central bank purchased and injected new digits. If they were to allocate that newly injected liquidity into productive capacity buildup, that inflation that we're so worried about wouldn't happen, or at least it would be far less. But instead, what do they usually do? They call their already cash-rich clients and they give them billions and billions of more loans, their credit policies are most of the time the underlying force behind inflation. It's not the fact that there is more digits into the system, because the 95% of the money supply is the bank deposit side, not the central bank reserve side and not the currency side. In the UK, the proportion of bank deposits is around above 95%. So the commercial banks with their credit policies are the real responsible entities behind that inflation, because, for example, because they're loaning to whom, for what? And that's the inflation is born in that process. And if, for example, there were an injection of new liquidity that instead of going to the banks goes to NASA, do you think that 100 billion is going to cause inflation? I don't believe so. I think the reason that 100 billion causes inflation because it's being given to the banks, and the banks are doing exactly what they've been doing for many, many decades. And actually, the proposal that I do in terms of monetary transformation, which is I call the product public capitalization notes. And the idea is that the central bank or the Federal Reserves, instead of buying bonds and debt instruments from the banks when they're creating new money, they should buy public capitalization notes, which would be an instrument that's still sponsored by the US Treasury, or sponsored or supported or guaranteed in some way. But it is built on a public-private partnership that finances economy-wide investment programs directly. So it doesn't have to go through banks loaning new money. It goes directly into productive capacity, technology creation, and it employs people. It creates new technologies, new patents. But we're not doing that. That new money is every time they invent new money, they invent it into the banks. And then we are all waiting and praying that now the banks are going to take care, allocate that new credit. It's not actually the same digits. It's just that now that they have more liquidity and less assets, they can loan again. That's the whole point of QE. So who do they loan? How much? For what? Is the real source of that inflation. And so to put it, to answer your question in one sentence, sorry for the long background, I think it depends where you're creating the new money. And even Friedman used to argue, and there is a reference to Friedman in my crypto paper as well, because even Friedman used to argue that there should be a steady growth in money supply. You can't have productive output growth without money supply growth, or you're going to have deflation if the money supply is going to stay fixed. So that's very much linked. So and the logic would be that instead of inventing new money all the time into the banks, we should come up with a new instrument, which I call public capitalization notes, which are based on space value creation. So look what's happening. Cryptocurrency is changing the logic of money from debt to randomness, to probabilistic distribution, to transaction validation and mathematical guesswork. It's utter nonsense, if you ask me. That's one thing. And then, of course, there are others which don't have any kind of such logic. They distribute. It's like a private party, basically. There's some of those cryptos are like that. They don't even have randomness. They just allocate it to themselves and their friends and their community and etc. So from debt to randomness, my suggestion is that we need to go from debt as logic of money creation to space value creation. Once we do that leap through new instruments, but who is going to convince the banks? Which economic department is going to get to the point where central banks are going to say, yes, we accept that we need to reinvent the very framework of money and we have to, but I think it's going to become unavoidable. And the crypto madness, quote unquote, the search for anonymity, the search for like stable coins, they're actually quite terrified. The Bank of International Settlement is actually worried about stable coins. Central banks are worried because what they're doing is that they're removing global monetary transfers from the architecture that was built by banks and central banks. It's coming, it's happening already, because they're transferring money around the world without going through the message-based system that banks and central banks are dependent on, which is SWIFT in the US, right? To the point that SWIFT is rushing to create its own stable coin so that it grabs that volume before it's too late. And if you ask me, all these actions around the world, even by the US, is linked not to actual productive problems or resource problems like oil. It's actually more to do with the currency in which the oil is going to be bought and sold. So linked to the same 38 trillion we started with.
Okay, but you're suggesting that these new investments that the banks would buy would be directed towards space development, right? And that would basically require a policy change on the part of governments to go that way. In other words, as opposed to just putting it into the general financial system and let whoever has credit worthiness borrow from the bank. That's what I'm getting here.
Not really, no, because at least my proposition is not about giving the money to the banks. That's the whole point. It should go to NASA. It should go to a public-private partnership. The new money, as long as we're inventing the new digits into the banking system, we are dependent on bank policies and their credit policies. That's the bottleneck. And banks are, every investment they make and every loan they give is calendar time dependent. Try to miss your loan payments and see what happens.
I don't want to do that.
For February 1st, by the 5th of February, you're going to have the phone calls, the emails. Calendar time chain the monetary system.
Yeah.
And the same happens with bonds. Now, the whole point is that if we're going to explore the universe, if we're going to go beyond this chained chase, we need to free the logic of money from calendar and also from risk. That's the other side, because calendar time is the chain on the debt side. But on the other side, there's also risk, because as much as you were saying earlier on, right, private equity firms, they're going to invest in your space venture if there are clients lined up, or there is a decent estimation that you're going to get clients for whatever you're going to do in space.
Yes.
That's why Elon Musk is forced to make profits as an internet service provider to be able to build Starship. And he says it in his tweets, and he argues, and people, we witness it, and we haven't yet realized that, in fact, it's ironic that human evolution has somehow been subcontracted to the revenues of an internet service provider. It's incredible. And of course, government procurements, budgets, and cargo servicing to ISS. That's another aspect of the revenues with which Elon is financing his venture. Not just ISP, but at least on the Starlink side, it's ISP. But that's in itself is the problem on the private side, that it's so risk dependent, so cash flow dependent. So how do we unchain ourselves from the risk and time chains that are keeping us stuck? We need a new kind of instrument whose value is derived based upon the impact we're having in space. Not the cash flow for the investor, not the PR for the government, or the debt-based logic of the procurement budget of the government and the approval of this and approval of that, but a money that is timeless and able to take the kind of immeasurable risks that it's going to take to actually expand. Between risk and time, we're obviously chained, and we're eating the planet inward. And because we're afraid, or because our entire investment framework serves the mortal risk-averse investor. And it's quite an evolutionary bottleneck, the mortal risk-averse investor. Yeah, we all have to please it, and all investments become plausible if the mortal risk-averse investor wants it, likes it, allocates money to it. And I'm not saying it's a bad thing to have a mortal risk-averse investor. It's just that you can't expand into the solar system with that logic. Yeah.
Well, it's going to be hard to convince the political leadership, though, to go your way, I think, given what they're most concerned with. Like, basically votes, which means how happy the public is right now, basically.
Oh, absolutely. I don't want to get David's show banned or blacklisted, but I can assure you that the level of opportunistic attitude and behavior as of this moment is very widespread. And no one, it's not the monopoly of the banks or the private equities, or it's all over the place. And so, no, I actually expect, as I said, my first answer was, we only really change when it really hurts, and it's coming.
Armen, I want to take you back a couple of decades, and
Yes.
this doesn't have anything to do with probably what we're talking about now, but I meet non-space people all the time, and sometimes we get into a political discussion, and the debt comes up, and someone will say, we got 30 plus trillion, and then they'll say, and here it is, Nixon should have never taken us off the gold standard. So I want you to go back a couple of decades and we're still on the gold standard. Nixon does not
Yes.
take us off. Nobody takes us off. What would that mean for our economy today and for going into space if we were still on a gold standard? Certainly, the price of gold would not be where it is today. But
Yeah.
how would you, if you wanted to take the time to educate that person, what would you say about that?
Well, actually, you're again spot on. You know, like Bitcoin. I'm gonna answer your question by answering a parallel question about Bitcoin. Bitcoin and some of the cryptocurrencies, right? They have a capped supply. Like Bitcoin, there's only 21 million that can be issued. In the industry and in the market, this is known as the fact that it's absolute scarcity, which is it mimics absolute scarcity, right? There's only 21 million. Gold, and actually this is compared or thought about in terms of commodities and commodity money, commodity-based money, which would be the gold-backed money, because there's only a limited supply of gold everywhere at any point in time, and also around the planet. So what you're doing is that cryptocurrencies mimic a natural scarcity, absolute scarcity, in order to create value appreciation, right?
Right,
And also because there's a theoretical understanding that it is scarcity that gives something value. That's another misconception behind the kind of theories that were used to support that kind of commodity money as well. Now, what would have happened if we were to use gold or would still be on the gold standard? First of all, the amount of growth we have achieved, and specifically the US, because it did start with the US, it wouldn't have been possible. Impossible. The amount of liquidity and the money supply growth that was used to create new sectors, new investments, and obviously we're talking many decades ago, right? Many of the industrial and technological transformations that we are enjoying now happened after the very same transformation you're referring to, after the 70s.
right,
So in a way, and all that growth in population, in technological and productive capacity. I mean, imagine we would have been limited by a money or currency that was absolutely scarce, or had absolute scarcity, which means that it would have had to appreciate in value, which is what the game of Bitcoin is, right?
right,
That's why it's going up, because the more demand there is, then there is that appreciation. So, but that appreciation works against it being a payment method, a method of the transactions growing and happening, because it limits people's access, right? And so that's what it would have been. It would have prevented the kind of growth that we achieved. And the issue isn't about being able to print, and we're inventing the logic. I mean, whether it's randomness or it's debt, right? It's a scheme. By the way, the president of the Bank of International State Settlements, Carstens, he describes cryptocurrencies as a combination of a bubble, a Ponzi scheme, and an environmental disaster. Mm-hmm. So imagine that this is what they define it as. But in my paper, I say, well, debt-based money is also a scheme. Okay, it's not a Ponzi scheme, maybe, but it is a scheme. So I think and the gold standard was a scheme. So we are going to invent a scheme with which we're going to create this incredibly valuable invention, which is money. And I mean, I know people keep on telling me. I mean, even some of my students come kind of ask me about it, and I keep saying, I mean, imagine if there was no money, I would have had to wake up at 4 a.m., go around, find someone who wants to listen to my ramblings to be able to get some eggs, right? I mean, can you imagine the world we would have had to live in? And I would probably starve, finding people to actually. So, in other words, the invention of money is a phenomenal catalyst of productive, creative capability. But how do we create it? Who controls it? How do we structure it? That's so in other words, that's the battle that we're going through. The big wall, the big marble wall of banks and central banks has been transformed. It's not the same anymore. They are struggling to survive. They are reinventing themselves to survive with stable coins and inventing their own tokens, from the JP Morgan to Citi to HSBC. Every central bank is rushing because the banknote is disappearing. So central bank money is losing importance. So they are trying to invent central bank digital currencies to stay in the game. And so this transformation that has been created, in fact, that's the major contribution of the crypto market. That's what they achieved. They broke that big wall into, but the logic is where we have to
You're cutting out. We lost a little
evolve.
bit of you.
Sorry, can you hear me?
Yeah, now we can. Yeah.
Yeah, sorry about that. So yes, I think it's between the
we said that again.
Losing bandwidth.
We're cutting out somehow. You're frozen. You're frozen in time. Can you hear me? Well, Marshall, what is it that you want to say, Marshall?
Well, I was going to move over and ask about the effect of investing into stock markets and into businesses versus banks, and the really big one is the IPO of SpaceX.
Armen, we're not getting you. If you can hear me, your image is frozen and now you're gone. Well, maybe he'll come back. We'll give him a minute.
I think he's probably trying to reboot.
Yeah, maybe. I suspect if the competition for money with a gold standard would be so high 5 decades later, if you wanted a mortgage or a loan or something, you might have to pay 100% interest on it, given that there'd be no supply of it. So you'd be competing against everybody else for a really, limited amount of available funds. Armen, are you back with us?
Yes, I am. Apologies. I don't know what happened. I think my connection dropped. Yes.
Yeah.
I think the banks got wind of this program.
Yes. Well said.
Marshall, go ahead and ask him your question.
One of my questions is, instead of investing in banks and going through the banks, we have investments in businesses, and in turn, we have one of the biggest questions of space right now is Elon Musk and SpaceX IPO. What's the effect of individual businesses and inflation and the value of money?
So you mean over SpaceX IPO?
Yeah.
Well, I mean, a SpaceX IPO can generate immense amount of capital for SpaceX, beyond a doubt. And if the plan is to use that generated capital to finance his Mars habitat and the series of starships and if he's planning on stopping by the moon on the way, if it's going to be dedicated for the creation of that infrastructure and the Starship fleet, yes, it's absolutely possible. And because equity investments are not like debt, Mm. So they're not the same way. They're not chained to time, to calendar time as much as debt. Now they're still linked because there is an annual report to be given to SEC. There is an annual accounts that need to be given. There has to be a shareholder meeting. There has to be all these things, and accounts have to be approved. And all those chains do plug in. There is calendar time there. But on top of that, there's also going to be the requirement to fulfill the profit expectations and capital gains expectations of the new investors. And that, I'm sure, is going to shape to a certain extent what SpaceX does with that money. So yes, it would be great. It would be a big change. But in my view, it will still not necessarily achieve what we're hoping to achieve. And it wouldn't be it might allow us to get and build an edge or achieve an edge relative to other competitors for sure. Because the NASA budget doesn't allow that, because the Space Force budget, even though it achieves quite a bit, it is a lot more security oriented. So the only person who's building starships is Elon, right? So that in itself will be a humongous win. But
we're still having bandwidth problems with you, Armen. Well,
but
let me do this with everybody, and Armen, if you can hear me, we're
the shape of that investment will still.
We can't hear you. You're cutting out.
Yeah.
I have one question, guys. I haven't had a chance, so hopefully I can get one in.
Go for it.
Oh, I want him back so we can answer it.
Armen, can you hear us at all? Or are you going to reboot the computer? I mean, I don't know if he can hear us. We're coming close to 2 hours. Armen, we don't know if you can hear us or not. You are frozen in time. So if you can hear us, John, why don't you go ahead and ask your question? Maybe he's able to.
So he spoke about the value of space, and key to financing space companies when they get out into the solar system is property rights and the future value of resources that they can sell to customers. And so how do central banks feed into that? If they can, if they could be just eliminated, can't we just have investors, loan the money, and I guess via some sort of mechanism to provide the capital for space companies to build out their infrastructure and then eventually make a profit down the road. But again, it's calendar based because they don't have the infrastructure now. They don't have the resources yet, but they will once they start mining the moon and selling the resources and making a profit. So I don't see how you can do that without having a debt based future profit system. I'm not an economist, but maybe you can articulate it better for me, David.
Armen is trying to log back on. I don't know how much of what he heard from you, and we just lost him again. So clearly he's having connection issues. I don't have any emails for him. I can try to articulate it if he gets back on. And if anybody else wants to ask him something, here he's coming back on. We'll try to get it in, but it looks like he's failing, so we're not going to have much more time with him. So let's see if he comes back on real quick, and John will have a priority. Armen, we see you coming back. You're muted. Maybe that's a good sign.
Yes, hi. I'm sorry. I have no idea what's going on. I'm not sure even sure it's not from my end. I just keep being evicted.
I'm telling you, Armin, it's the forces. John had a question. I'll try to
Yes,
real
please. Yeah.
quickly summarize it, and we're coming close to 2 hours, so I know we're
Yes,
overstaying your hospitality. So,
please.
to go into space with the private sector and do settlement and other things, he's talking about the need for private um, property rights, which we
Hmm.
don't have, and how property rights might be financed. So they're still talking about financing them with,
Hmm.
John, you can correct me, using calendar time because there really isn't any other option. So to acquire property rights, to do mining, to do development, um, can the system enable us to do that, acquire property rights with calendar time, and continue to expand and grow? And John, if I missed something, you can step in.
Yeah, let's just assume we have property rights because we already have some legislation in place that allows us to get um,
Yes.
to get a profit from resources extracted from celestial bodies. So assuming we have that, then a company wants to put infrastructure in place, but they don't have the infrastructure, they don't have the profits yet. So it's a future value situation.
Yes.
So how does that play into this? I mean, could it all be independent of central banks, and could we just do it with private financing?
I mean, for the generic question about property rights, I think the only thing that will definitely be required, because if you think about Mars, right? Mars has a very different orbit. It has a very different calendar. Our calendar-based money, let's say, in and the Mars-based calendar and Earth-based calendar and money will have to somehow be synchronized to make sense. Or alternatively, some new forms of uh, uh, Mars calendar based money will have to be created. Although I don't think that's the right solution, but given what we have now, that might be one way of thinking about it. So the payment for the property rights. I think, yes, obviously there will have to be some adjustment, but the creation of property rights, I don't think that has anything to do with calendar rights as such, but it has
No.
to do with the recording, right? In some form of a ledger that is going to say that John owns that piece between that crater and the other hill. Whoever is going to mark those first property rights, that I think is a lot more fluid question, which is also
No,
part of the reason.
I don't, that's not my question. My question is assuming we have property rights and we can derive value from those resources,
Okay.
how will, I mean, our standard process in capitalism is property rights. So, and we can finance that with debt. So,
Yes.
we're still going to have that regardless of where we go, right? And so, how if we eliminate the central banks, then how do we handle it with cryptocurrency?
Okay, well, I mean, at least from my perspective, I don't think we should eliminate crypto central banks. I think we should reform the central banks and banks. I actually find, even though I think there has to be a new hybrid of a system where we use the technology we have gained from the crypto revolution to deploy a more evolved logic of money. Right now, banks and central banks are adopting the technology to debt and debt-based money. But I think the next stage of the evolution will be where we adopt the technology to deploy an evolved logic of money. So in that logic of money, the new logic of money, I'm just saying what my suggestion is, right? I mean, it's my opinion, is that the improved logic of money will have to be based on the responsible creation of space value. because that's the only moment that property right that you're referring to, whether it's on Mars, it's on asteroid X, wherever it may be, it's the creation of new assets, responsible creation of new assets, and not just in outer space, also on Earth, right? So the creation of new property and new assets can in fact happen. And in fact, that's the whole idea of the monetization of space that I proposed in the September article. Yes, those property rights, those assets, those creations, because we use money to manage our own productivity. There's nothing bad or wrong about it. The only issue is that the mechanism with which we're creating money to incentivize human productive power in the cosmos is actually counterproductive, and it's actually undermining the even our own existing home, and let alone allowing us to create new property and new property rights across the solar system. So I agree with you, that has to happen, and that will happen, ideally with a new technology-based money that is where its logic is dependent on space value creation and not debt. So the kind of next generation crypto or central bank or bank managed money, it doesn't really matter, because at this moment everyone is using the cryptographic equation, as long as that the money that we're creating through the cryptographic methodology is built on the logic of creation that is about space value creation. And property rights are an integral part of that space value creation.
So I don't know.
So I don't know if I answered.
I don't understand, because you're going to have a debt or a loan to finance a company's operations, right?
No, I disagree. No, that is a current. I mean, that I agree in the current model. Yes, you're right. But the whole point is that if we continue with the debt-based logic, and also there are some companies who finance themselves through private equity and or venture capital or private investors, so they don't necessarily use debt to finance their operations. But the debt logic, when it comes to you're thinking about massive civilizational level expenditure, which is going to include financing for startups and inventors and larger corporations, and all that effort is going to be financed. That kind of expansion, it cannot happen with debt. It cannot. It is impossible, because debt requires repayment based on a calendar time schedule. And these projects that are going to go and change orbit, I mean, it's basically like I'm investing based on this orbit to move to another orbit, but I'm going to repay my investment based on the first orbit. We have some serious issues, because it's not just about the fact that it's debt. It's because the structuring of those instruments chains us to the fixed movement of Earth. A debt means September payment, 2021, the bond matures. You have to pay the full amount, or you have to refinance it. You can refinance it, but the logic of that entire monetary system is watching the rotation and revolution of Earth instead of what you are achieving on Mars or anywhere else.
What I'm getting here with that instrument you're saying that the central bank ought to buy, effectively it's almost like a personal loan you'd give to somebody, where you're just sort of saying, okay, I'll loan you $100 or whatever, and in that case there's no interest or anything else. It's just they'll pay you back sometime later. Is that what I'm kind of getting, when it actually turns into value somewhere in the future, but it's indeterminate when that would be?
No, it's not a loan, actually. The public
It's just a gift
capitalization.
then. So it's just like a grant.
No, it's not. No, it is an instrument that is providing shared ownership of a very highly risky investment, coordinated project, and whose returns are very distant in time. So yes, in a way, but it's not alone. The whole point is it's non-debt, no maturity, and dependent entirely on responsible space value creation. So the trigger of creation is not that, because what's the trigger of creation of when you go and borrow from the bank, right? What is the trigger of the creation? The moment you sign the contract, right, that I'm going to repay, that contract becomes the asset on their asset side, with which they type your deposit on the liability side. That's the way money is created by commercial banks. The moment you sign, the digits are invented. The digits in your deposit account become their liability, backed by your signed debt contract. Now, the logic of creation is debt, and is debt-based. Central bank level is the same. Central bank goes and buys a bond from bank A. It's a debt being purchased by digits, which are liabilities, which are being backed by debt assets. This is how it works. This is how money is invented in the two-tier economic monetary system we live in today. The public capitalization note, sorry, the public capitalization note model is saying that you have to change the trigger, the logic of creation. The logic of creation is not because John or Armen signed his debt contract. It's because John and Armen and NASA and a host of technology companies and startups have signed up to create XYZ technology to achieve XYZ habitats in the next 15 years. So the trigger of creation is responsible space value creation and not debt repayment. Until we make this shift, we are stuck between the debt logic of fiat money and the pseudo-randomness of cryptocurrency.
So Armen,
That's it, yeah.
company
Yes.
ABC is entrepreneurial and is going to build a research, technical, and business park on the moon. And they estimate it's going to cost $2.7 billion. So how do they get the $2.7 billion to build the research park on the moon?
Well, based on the model that I'm proposing, you mean?
Yes.
Well, that has to become, the way I have described it is that there has to be a public-private partnership that sets the priorities, okay? Because it's going to have to be, thank you for being here. I appreciate also an incredible discussion, great questions, and thank you for being here. So the logic is that there has to be a set of space priorities set. And my suggestion was that such as priorities will have to be set by the likes of NASA and the private space sector in collaboration and coordination. If that moon project is part of the space priorities, then it gets allocated the 2.5 billion as part of that capitalization instrument and the allocation. The structure is in the monetization of space article, actually, the exact design of the instrument and the components. And so because it's quite hard to present it only orally, but so the graph and the designs and the figures are in that article. I suggest maybe having a look at that too, and I'm happy to, of course, discuss it again.
So an entrepreneur can't do whatever they want. They have to go through this sort of planning and review process to be approved. They can't just say, I want to go put 100 habitats on a lava tube for Armen's village. And unless that's approved by this group that you're talking about, NASA and the private sector, then there's no way for them to go build Armen's village on their own.
Well, they can if they can find the funding. But if take the public capitalization note out of the picture right now, a company like that has two options. Either they're going to go and try to convince NASA again to adopt the project, or they're going to go and convince one of the large corporations who already have some form of orbital access to finance it, and or they're going to go to private equity or other private investors who are going to approve them or not based on cash flow priorities, risk priorities, government funding levels, budgets, debts, and so on. Now, with the public capitalization note, there is because imagine this. I mean, imagine you suddenly have $100 billion ready to be invested in a variety of high priority space projects, right?
Right.
I mean, there's going to be some form of accountability, right? Just the way there is now with different sources. So it's not like it's a control issue. It's simply to make sure that the 100 billion that is being injected into the space sector, or 200 billion, in fact, we can be a lot more, as long as there are the projects and the productive activities that to allocate that money to, and not just kind of waste it or just generally misallocate it. So yes, there will have to be some form of strategic prioritization, and if it is part of that overall venture, overall plan, then yes, if they qualify, because it's not just about qualifying, they also should be able to spend it responsibly, manage it responsibly. Because if you get a public capitalization note and all the money is misused and none of the vision is, or the priorities are achieved, it will be the last public capitalization notes issued. So some form of accountability will have to be injected, structured within it. Absolutely.
Guys, we're going to have to wrap it. And
Yes.
I want to thank Armen for staying extra. Do you have any closing comments? Or Marshall and John, you're still with us. John left for a minute, but any closing comments from either of the two of you? And Armen, any final last
Thank you.
you want
Thank you for a wonderful discussion, wonderful questions. I enjoyed every second. And sorry, I don't know what happened with the connection at those moments, but I very much enjoyed the discussion. Thank you for inviting me.
I'm telling you, they're after you, Mark Armen. You got to start
Yes,
opening your mind to conspiracies.
Very thoughtful show.
Thank you very
Thank
much.
you.
John, real quick, do you
Thank
have
you.
any closing? Because we're getting ready to log off. Do you have a final comment?
No, thank you. Thanks for coming on, Armen.
Appreciate
Thank you for all of you for the questions and the very insightful questions and a great time. Thank you.
Okay, thank you. And for the rest of you, I look forward to seeing you on Sunday. Thank you
Thank you.
all again. Keep looking up, everybody.